Welcome to the Business Simulation Case Introduction. Throughout the Business Simulation course, you'll be following a three-step process. Firstly, we will go through a planning phase in which you and your team members will read through the case study or the reports given, and you will plan what you will do for the following year. Then you will go through the simulation during the decision round, where you'll be making actual decisions inside the simulation tool. Then we will review in plenary, looking at the impact of all your decisions on your results. So ladies and gentlemen, we've searched far and wide for the finest business minds, and there you are. For the next period, you will take over the leadership of a company called TechTabs Limited. TechTabs Limited is a South African-based company. It produces and sells 3 models of tablets. These are of the electronic kind, so it's a tech company, not a pharmaceutical company. They also buy finished products as they have limited capacity to produce to meet that demand. These are some of the challenges that have been faced by the company in the past and are also stated for you in your case study. For example, they've had a loss in market share in the higher end models. These largely driven by everyone competing to increase their profit margins. You also have declining gross profits in your lower end models. These driven by the price sensitivity of the different products and therefore pushing down their gross profits. These may change as you enter into the simulation, since you'll be competing against each other and the decisions affect the whole market in total. The company sells 3 products. You've got the tech book, which is the lower end model. And in the past, it's accounted for 31.6% of your revenue. The mid-end product is the Zeroid. It's accounted for your revenue at 39.6% in contribution. And the top-end product is the iTab at 24.3% in revenue contribution. This is based on previous year's revenues and will change as the market moves forward. When you start in the simulation, you would have had equal market share with all the other teams in your group. And this is across all the products. So this means that in the previous year, you're all equal. Now, how will you make decisions in the simulation? Well, we've done some market research on your behalf. We've gone to the different customer segments and we've asked them what is important to them. If you look, for example, at the customer segment for the textbook market, we've gone to them and we've asked, Mr. Textbook, what is important when you purchase a textbook? And they've said price, payment terms, the availability of the product, the stores, which are stores that sell only your products. Your agents are retailers that sell everyone's products at a commission. Staff availability, product innovation, company advertising, which is you advertising the whole company, and product advertising, which is you advertising only the textbook. Then we asked on a scale of 1 to 10, 1 being not too important and 10 being very important, how important are these criteria to you? And the textbook buyer has said that price is the most important factor, followed by the payment terms and the stores, relative to product innovation and maybe product advertising as well. So if you were to increase price on this particular segment, you will generally find that you would lose market share. If we look at the Zeroid, which is our mid-end product, this one is a trendier customer. They prefer more product advertising, company advertising and innovation, and also tend to buy more from the agents instead of the stores. And then finally, you have your top-end product, which is a more business-like customer. They prefer product innovation and the availability of the product with staff availability, and they don't care so much about price. So you'll find that the price is sitting at a low range. As you plan for the simulation, we've given you as well your forecasted market data. This is telling you the demand for your product overall in the total market. So in year 0, this is last year. This is how much you sold equally between all the teams in the market. In year 1, that is the forecasted demand, and in year 2 and in year 3. As you can see, the demand for the textbook is going down, while the demand for the Zeroid is going up. Your job would be to make the decisions to allow you to take advantage of what is happening in the market. Those decisions are based on your strategy, and you will then implement your strategy through different decisions in marketing and sales, where you'll be setting prices, you'll be deciding on the market share, how you're going to distribute the product, and also advertising. On operations, you will deal with how you'll produce or you buy as finished products, and also the innovation of those products. On procurement, you're deciding from who you're buying at what price and at what volumes as well. Human resources, you are responsible for hiring and dismissal, salaries and training as well. In finance, you can make payment terms, you can get loans, and you can raise or retire equity. You may also have to decide on other external events that may come up within the simulation. At the end, we will declare a winner based on a winning criteria. This winning criteria is a balanced scorecard of 3 KPIs: your return on equity, your gross profit margin, and your net profit margin. The team that has the highest average between those 3 will then win at the end of the simulation round. However, we also need to consider some qualifying criteria. You need to make sure that you have a customer satisfaction of at least 74% and also an employee satisfaction of at least 74%. So if you have any questions, please do email me at brian@learningsims.co.za and we can assist you. Otherwise, we'll see you in class.